Are you ready to dive into the ultimate strategy for maximizing profits while minimizing risks? Buckle up because I've discovered something truly mind-blowing. Picture this: a trading strategy that's an absolute game changer, capable of delivering minimal risk and maximum reward. I mean, who wouldn't want that, right? I put this strategy to the test on Forex major pairs within a super intense 30-minute time frame. It generated a whopping 25 signals, with a jaw-dropping 20 of them turning out to be winners. It's an opportunity you don't want to miss. Let's go. This strategy works wonders on Forex major pairs, and the best time frames to focus on are 5, 15, and 30 minutes. We'll use two TradingView indicators. Step 1. Adding the Zone Detector. The first indicator we're going to add is the Zone Detector by CA. This tool is great for spotting supply and demand zones in the market. However, for our strategy, we don't need these visual boxes. So here's what we're going to do. Open the indicator settings. Under the Style tab, disable the boxes and labels. In the Input tab, adjust the previous period to 49 and the volume change to 14. These settings will tailor the indicator to highlight key buy and sell signals we need for this strategy. Here's what makes it unique: the signals alternate. After a buy signal, you're guaranteed a sell signal, and vice versa. If you miss one signal, no worries. Just wait for the next one. This dynamic approach offers plenty of opportunities for traders. Step 2. Adding the Super Bollinger Trend. Next, we're adding the Super Bollinger Trend by Zellerman. This indicator combines the power of Bollinger Bands and Super Trend, giving you a complete view of market volatility and trend orientation. Here's how to set it up. Open the Settings panel. Change the period to 49. Disable the zigzag feature under the Input tab. Under Style, uncheck the labels, lines, and table. This will leave you with a clean and efficient indicator that's perfectly suited for this strategy. Let's talk strategy. Now let's dive into how this strategy works. For a buy trade, wait for a bullish trend. Look for the Super Bollinger Trend moving average to turn green. This indicates the start of a bullish trend. Identify a pullback. Every bullish trend has retracements. Use the Zone Detector to find them. While the moving average is still green, wait for a sell label from the Zone Detector. Enter a long position. Once you see a buy label after the pullback, enter a long position. Stop loss. Set it at the recent swing low or use the ATR indicator. Take profit. Aim for 1.5 times your risk. This approach minimizes exposure to risk and keeps you in line with the trend. For a sell trade, wait for a bearish trend. Look for the Super Bollinger Trend moving average to turn red, signaling a bearish trend. Spot a pullback. While the moving average is still red, wait for a buy label from the Zone Detector. Enter a short position. When the next sell label appears, enter a short position. Stop loss. Place it at the recent swing high or use the ATR indicator. Take profit. Again, aim for 1.5 times your risk. By sticking to this process, you'll avoid common pitfalls like overtrading during a single trend. Why this strategy works: unlike typical indicators that flood you with signals, this method focuses on quality over quantity. Here's the key. You'll only take one trade per established trend. Once you've entered a trade, wait for the trend to end before considering another. This ensures you're not exposed to unnecessary risks during trend reversals. Common mistakes to avoid: chasing signals. Don't jump in on every label you see. Wait for the full setup to align with the trend. Ignoring stop losses. Always set a stop loss to protect your capital. Overtrading. Stick to one trade per trend to avoid being caught in false signals. Backtesting results. Let's revisit the results from backtesting this strategy on Forex major pairs. Total signals, 25. Winning trades, 20. Win rate, 80%. This demonstrates how effective and consistent this strategy can be when executed correctly. Final thoughts. This strategy is a game changer for traders looking to minimize risks while maximizing rewards. Now let's talk about the practical setup for this strategy. Ensure you have a stable internet connection and access to a reliable trading platform, such as TradingView, where you can easily add and customize indicators. Take your time fine-tuning the settings we discussed earlier, adjusting the period to 49 and disabling unnecessary features. Small tweaks can make a big difference in your overall results. It's tempting to jump into every buy and sell signal, especially when you're on a winning streak. But remember, our strategy is designed to take one trade per trend. Resist the urge to overtrade, as this can expose you to unnecessary risks. Pay close attention to the Super Bollinger Trend's color changes. A shift from green to red, or vice versa, signals a significant market shift. Ignoring these signals can lead to losses, especially if you're trading against the trend. Now let's revisit the sell setup. Just as we wait for a buy label during a bullish trend, the reverse applies to bearish trends. After the Super Bollinger Trend turns red, we wait for a buy label to indicate retracement. The next sell label confirms the continuation of the bearish trend, signaling an entry opportunity. Here's a step-by-step example for clarity. The Super Bollinger Trend shifts to red, signaling a bearish trend. A buy label appears on the chart. This marks the retracement phase. The next sell label confirms the end of retracement, indicating it's time to enter a sell position. Place your stop loss at the recent swing high, and aim for a profit target 1.5 times your risk. Notice how the strategy keeps us disciplined. By sticking to the rules, we avoid the pitfalls of emotional trading, such as fear of missing out, FOMO, or panic selling during a dip. No strategy is complete without robust risk management. Even with a high win rate, one poorly managed trade can wipe out previous gains. Here's how to protect your capital. Position sizing. Never risk more than 2% of your account on a single trade. For example, if you're trading with a $1,000 account, your maximum risk per trade should be $20. Trailing stop loss. Once your trade moves in your favor, adjust your stop loss to lock in profits. This technique minimizes losses while maximizing gains during extended trends. Diversification. Apply this strategy to multiple Forex pairs or even stocks. By diversifying, you reduce the impact of any single market's poor performance. Let's talk about the power of backtesting. This isn't just a checkbox exercise, it's your gateway to mastering the strategy. Use TradingView's replay feature to simulate trades in historical data. Start with a demo account and practice until you achieve consistent results. While the Zone Detector and Super Bollinger Trend are powerful on their own, you can enhance this strategy by adding complementary indicators like the RSI or MACD for additional confirmation. Market sessions. Forex markets operate 24/5, but not all sessions are created equal. Focus on the London and New York sessions for higher volatility and better trading opportunities. Psychological preparedness. Trading isn't just a numbers game, it's a mental battle. Stay disciplined, stick to your rules, and avoid letting emotions dictate your actions.